Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day regardless of how crappy the market is right now. We saw a pretty significant break of structure, that 116,000. Price ran down to fill the fair value gap. Well, part of the fair value gap, but all of the CME gap here, which is fantastic. We do have a new one forming, of course, at 113,500. We'll talk about that in a minute. The important things you want to watch here and stick around for is this Power 3 manipulative wave setup. We're going to talk about how that structure typically plays out. We're also going to talk about ETF outflow here and the fact that we have a comparative scenario to February where the price action in this case here ended up pulling back quite significantly after we saw ETF outflows starting. And today is the first day that we're seeing that significant ETF outflow, or not first day rather, it's like the week's accumulation rather. So total for this week here, we can see a pretty significant outflow of ETFs. This number here, it was almost 800 million, a little over 800 million on the 31st, which was last Thursday, this recent Thursday. Okay, so we're going to talk about all that. So starting with a crypto market overview, the important thing to recognize here is the simple fact that the fear and greed index is pulling back quite significantly. This is actually very, very good. We want this to happen because when fear and greed index pulls back, it allows for the price action itself to continue higher once enough people FOMO into shorts, and the market makers are pleased with that and they pump the price action up after that. This is a good sign though. I've been talking about this for a while. While, you know, sometimes when it gets really, really over extreme fear, that's a different story a little bit, but we're still above a lot of key levels here. We're not in bad position at all. So for the fear and greed index to be tapering off while we're still in the 100,000 plus range, that's a very good sign. Altcoin season index is also another reflection here of how strong the market is overall. Truth be told, this is kind of crazy here. We're at 36 still here. And anytime we're maintaining in the 30s, I've been watching this for a while, when you stay in the 30 range on the index here, it tells us that a lot of altcoins, even though they sold off pretty heavy yesterday, are still holding fairly strong. In other words, money is flowing into stablecoin and effectively waiting to be put into altcoins. There's that natural cycle. We will talk about that as well, but the general consensus here is that this is mostly positive. And if we do take a look as well at derivatives, we want to recognize that we're back up on open interest here today versus yesterday. So that's actually quite significant. We had a pretty significant pullback yesterday, but today we're looking a lot better. Okay. Now this is a weekend, things calm down a little bit, but that's just kind of where we're at. Let's start with this here before we jump into the liquidation data. I want to talk about this Power 3 manipulative wave trade setup. Now, if you're not familiar and you are just a part of our Discord, there's a lot of information in here, a lot of good education. Make sure you check it out. But this is kind of an example of how this works. In other words, you have a situation where the price action works itself into an accumulation phase, which we just had. And then there's usually a manipulative wave down that kind of traps late shorts, gets people to start selling, that fear piles up, and then the market makers just rip the price right back up. So I have that kind of that iteration here kind of put on the chart just so you can kind of see what that's supposed to look like. So we may very well be range bound between 112,000, the previous high close rather, 112K as a rough estimate. That was a previous high for us. And we can see that hasn't been fully retested yet. So 112,000 is a very sensible area to consider a long position, just based on the simple fact that that is that retest of the previous break of structure. Okay, so that's kind of what we're looking at there. But the key takeaway here is that there's a decent chance we range bound between 112 and 116, and then once we break that structure, it's probably going to be lift off to sweep all the previous shorts here. And I'll show you on the back end data what that looks like too, because I'm pretty confident we still have a lot of short positions between 120 and 124. That was the previous consideration. This is another thing I want to point out too. This is extremely important when it comes to the overall ETF outflow. So if we take a look at the 1 year for the ETF outflow, we can recognize that the last time we saw a pretty significant correction, we had about 2.4 billion outflow for ETFs on the week of the 23rd in February. That's shortly after Trump took office, and you remember what happened back then. That was a lot of fun. But it's kind of prefaced there with 2 solid weeks of ETF outflows. Okay, so if we have another ETF outflow week coming up, that may be a bad sign, because we look here, this is that 2-week time frame before the significant ETF outflow. Okay, so we got 2 weeks worth of consolidation, and what do you know? Roughly what 4 days later, the price was down as low as 78,000. We dropped from 93 to 78K. That was a pretty significant correction, a rough estimate of about 16 to 20%. Okay, so I'm just kind of bringing that to your attention. The last time we saw this kind of ETF outflow, there was 2 weeks worth of ETF outflow. It was followed by a very, very significant correction in the market. Okay, so we could be seeing an early structure of that, or it's the inverse here where everyone's getting trapped into shorting and they're just going to rip our faces off here with a strong long position. Let's go ahead and take a quick look here just to touch on this too. CME gap here for Bitcoin. It is forming as per usual. It closes on Friday and it closed yesterday. CME futures closed at 113,500. So we're now currently at about 112.8 as a rough estimate there. So the CME gap is still continuing to form. So just as per usual, we saw from last time, this is the previous CME gap here. This finally got filled, even though we had a lot of naysayers in the comments for a couple of days saying that those never happen. Truth is, I've looked at the history of CME gaps, over 95% of them get filled. So there's a distinct chance if we open tomorrow on Sunday at this level, there's a good chance that we do see that price rip back up to fill that CME gap if we close below that 113.5. Either way, the larger the gaps, the more likely they are to get filled. We're going to talk about fair value gaps too. Remind me to do that, or I'm reminding myself to do that. Obviously, you can't do that, but we're going to talk about that as well. So jumping into the back end data here, we can see our break of structure here. This is technically a bullish type of pattern here. Keep in mind, that's exactly why I like to talk about patterns not being the reason to trade. I prefaced this yesterday, and congrats to everyone who watched the entire video all the way through. You'll know that I reiterated multiple times that you want to be very careful taking long at supports. Majority of support levels for altcoins broke yesterday, okay? We want to treat that like a new resistance now. That's the concept here. And the same thing here as well for Bitcoin. 114K is likely the new resistance for us. So just something to be mindful of. Either way, we're in a descending type of trend here. We're bearishly backtesting that descending trend. Commonly, though, we do see a lot of manipulative patterns derived from that. Having said that, though, we're not going to look at these here too much. The bid-ask ratio is shifting. We're starting to see a lot more bids, a lot more buys as the price pulls back. That makes perfect sense. We take a look at liquidation here. Let's actually start with open interest first and just kind of recognize that there's not a ton of open interest here locally, but 110 and 112 are the two heavier concentrations close by. We can see liquidation short delta is at 18 billion, and it's been steady for the last 24 hours. So that pretty much emphasizes the fact that more people are shorting than taking longs right now. Big surprise. Obviously, the market is reflecting that. We take a look here as well at liquidation. There's that pocket of liquidation swept perfectly at 112.6K. Look at that, almost very little left to the downside here because longs are kind of timid right now to consider jumping right back in the market with good reason. So last but not least, we do have longs, of course. These are more late longs and early longs between 106 and 108. And just to clarify, if you're not familiar, liquidation is just a representation of where people's stop losses and or their actual liquidation event could occur. So they're going to get stopped out there, or they'll close their position at a loss. That's essentially the concept there. So what this basically just means is that people are using lower leverage, thankfully, that's further away, feeling safe under that 110K support. And that's a rough estimate. 110,000 is not like a solid support level for us. It's just kind of that previous high range, okay? So all that said, let's go ahead and jump into Bitcoin and see where we're at. Because what we just looked at is an important foundation of understanding how things are moving on the back end. We can disseminate what we've seen so far as a bearish type of microstructure, is a manipulative type of scenario here, and the overall sentiment is that we're more likely to go down than up. The 110 to 112K range seems more practical at this point. It's best to presume that now that we've lost our structure, which once again, is that rough estimate $116,000 support. So let's take a look at the daily time frame and just go ahead and take a look here. In fact, let's peek over at this really quick just to give you some perspective, just to clarify. Previous high is this guy right here, 112,000. It's likely to be retested as a new low before the price can bounce off of it, right? That's generally how that's supposed to work. And we do coincidentally have a fair value gap in this area. That is noticeable right here, as low as 112,200. It's mostly filled, okay? So just keep that in mind as well. All right, so let's go ahead and get back on the charts here and just quickly reiterate, we got our 0.618, 0.65 golden pocket. This is another reiteration of how ridiculous Fibonacci retracement levels can be if you use them only by themselves. In other words, if you were a golden pocket trader, took along 114,500, you would be in a bad position right now. Okay. Now, I'm not one to talk because I took a long at 114,000 myself, and that position that we took has an average entry of 112 and 110 as well. So it's a very low leverage, low position size type of trade, trying to average into this bottom here that I feel is tentative. I do think 110 to 112,000 is that local support, and we'll talk about that as well. So to finish this here on the daily time frame, when we look at this, we are under 50 on the RSI. Stochastic swinging down, MACD is diverging. These are all reasons why we shouldn't be considering a long position, because most everything is bearish. Now, that's the funny thing about the market lately. Every time you get confirmation that the price is going to go lower, it turns right around and rips your face off. It did that probably about 3 or 4 out of the last 14 trading days. Every time we dipped, the price ripped right back up. So now that we've broke that structure, the probability is now higher. That's the thing you got to recognize. So manipulation's a hell of a thing, but even though it's fairly consistent and keeps happening, oftentimes when you break structures, the likelihood of continuation becomes higher. And a lot of it too hinges on the fact that, I don't know if you noticed, but President Trump was tweeting a bunch about sending nuclear submarines to Russia and all sorts of crazy nonsense. That's why we had this slippery slope yesterday. It actually worked out really fast and really quick. So just bear that in mind. You know, that guy starts tweeting, the whole market goes to hell. So that's where we're at on Bitcoin. It is what it is. It's not the best, but it's not. It could always be worse. We've been expecting it for a while. Taking a look over here at Ethereum, let's go ahead and double check this in just a moment. Let's go ahead and pull up the backend data for our altcoins and kind of see where we're at here first, because a lot of alts lost their support level. Ethereum itself specifically lost that $3650, $3,700 support that I was considering taking along. Glad I held off on because once more, you don't just buy the dip to buy the dip, even though lately that's actually worked out fairly well. When we take a look here though, open interest, there's that area 3650 is that resistance for us now. So if you see the price come back up to 3650, Bitcoin's running towards 114K, there's a solid chance that that's going to be an exit consideration for long, or more importantly, a short consideration. So just to kind of reiterate and reaffirm, open interest is commonly construed as, and is similar to in most cases, a support or resistance level. We're below a lot of open interest, therefore we're going to have exit liquidity if the price comes up there, where people are going to be starting to sell their positions at a loss or at break even. That's why open interest ends up working as supports or resistances there. So the odds of people adding to their position on the way the price goes up being underwater is very low, because they just want to get out of their underwater position right now. I'm sure you've been stuck in a position you just want to get out of at break even. Isn't that a good feeling to be able to get out of it with some relief? That's what people are going to be finding and trying to find at 3650 and 3700 too, respectively. So taking a look here at liquidation delta, we're at 16 billion. This rivals Bitcoin's amount of volume. So this kind of speaks to how much trading volume we're seeing with Ethereum. And if we look here at basically this is a chunk of 30, right around 3,400 is that last area of liquidation here locally. So we could very well see 34 as a retest before the next potential run back up to 3650. So let's take a look here. This is a massive overextension here. We are, we're about 1, 2, 3, 4, that's 12 to 16 hours of continuation of the downside after hitting an overextended state. So we're now retesting this double bottom here. So that's not a good sign ultimately, but it also reflects that we very well could bounce here soon, where we do have a potential bounce off our previous high, overextension high. So once more, at this point, you never truly want to take a long into this kind of price action. You don't know where the bottom is at. And most coins, as we can see here, have a significant fair value gap below the price. Okay, so I'll redraw out our fib levels. I'll post a new playout chart on our Twitter, Telegram, and Discord. If you're not familiar, it does look a little something like this. And yes, I do have a picture of myself and my son now. Cooper, you're awesome. We love you, buddy. All right, so let's get back over here. I like to mention that because some people are like, wait a minute, why don't you have your Crypto Cash logo up there? Well, I got it pretty much everywhere else, so it's all good. Okay, so take a look here on the daily time frame for ETH. The other indicators here are kind of letting us know that we're potentially at maybe a potential reversal. In other words, I'm not proposing we're just going to bounce from here. There's nothing here telling us we're going to recover instantly. But if that $3,400 liquidation level gets fully swept, and then the price action for Bitcoin starts to go sideways, we may be in a position where we see ETH continue to right back up again. But I think there's a strong chance we continue lower because there's such a large gap on the price action that there's no real reason to propose that we can't go any lower. And just to give you worst case scenario, based on fib levels and other areas of confluence, we got our 20-day and our 50-day SMA. Excuse me, that's our 50-day. We're in a position right now where we're probably going to see 3,000 as a likely bottom here for ETH. Once more, hard to say specifically, but based on fib levels, that's kind of where we're at here. And once more, those are just the macro fib levels, and I'll post a new playout chart once more to reflect that. Overall, on the 4-hour time frame, we're massively overextended. The likelihood of recovery is quite high here, just based on us being well below 20 on the money flow index. So money flow index is implying that we have a significant continuation to the downside, and the likelihood of bouncing and pivoting from here is quite high, once more based on overextension alone. Okay. Now, is that a reason why you take a trade? Probably not, but it is truthfully a situation where we should pivot and bounce here. Another reason why I feel that way, if we take a look at the previous high, we can see we had a decent amount of volume here at the 34.30 range, which is coming up here and very, very close to that. So once more, previous highs can work as new lows. So that's kind of where we're at. And it does make sense too that we've actually swept this lower area of liquidation after losing our structure there, okay? So if you're gonna consider a long, I would insist on securing profits between 3,650 and 3,700, okay? That's kind of where we're at. All right, so that's ETH for you. Solana, also a good old landslide here. How much lower are we gonna go? Well, I mentioned previously we have a support level at 157 and 165. We'll talk about that after taking a look here at liquidation first. So back end, open interest, we don't have a ton of open interest here. This is the last 1 month of open interest, and we can see 152 is that next heaviest concentration area. So there's potential we see 152 as that next area of support. Liquidation short delta is at 4 billion. That's quite high for this coin. Once more, we have liquidation as low as 156 to roughly 145. So these levels keep piling up as the price goes lower. This is a common occurrence you'll see when people keep FOMOing into to these bottomless dips. So what's the daily time frame tell us? Pretty much the same thing as Ethereum. Only difference is we've lost 50 on the RSI, but we're hanging out right here at the 50 and the 20. Sorry, that's the 200 and the 50-day SMA. So there's some confluence here at 162, not just with open interest, a little pocket of previous open interest, but also the previous high range. There's a lot of reasons why this area should provide some support. Okay, so I think that we're reaching our tentative bottom here, of course, in the 160s. 155 to 160 is probably that strong area of consideration for a long. So what we want to be doing is paying attention to Bitcoin dominance, and as soon as it starts to taper off, we want to maybe consider some long positions. But for right now, the only green indicator on the charts is Bitcoin dominance, which is bad. You don't necessarily want to take longs into that. So the overall sense here is just to probably be patient, wait on the sidelines until we see something, until we start to see that naturalization of money coming away from stable coins, which we can see here. Money flowing into stable coin is quite high because profits are being taken and the whales are waiting to be able to add to their position when the time is right. And right now, they're just going to continue to sell. So that's kind of where we're at there. So that's Solana for you in a nutshell. Taking a look here at SUI next. Let's go ahead and quickly recognize once more. Broadening wedge pattern invalidated. Almost every single pattern became invalidated yesterday based on A, Trump tweets, and B, just massive hysteria of selling pressure. It's just consistent like that. And typically when we see a selling pressure on Fridays, we see some kind of buying pressure on Saturday or Sunday. The problem is now at this point, we have a lot more fear in the market, so people are maybe a little less apt to buying and more apt to selling, and that's not a great sign. So let's take a look at the backend data here for SUI so we can find any kind of outliers here. We kind of zoom out, so to speak, and we can see a little chunk at 323 of open interest, but pretty significant gap. $3 that next heavy concentration. Liquidation short delta is still very, very high for this coin. Not recommended to consider taking a long into this, especially with this amount of liquidation to the downside between 280 and 320. So I would say waiting for $3 to 320 is a much better consideration for SUI, just based on this metric alone. Now, we're massively overextended. The likelihood of recovery is quite high. We are right here at our 0.5 fib level, but we did lose our SMAs on the smaller time frame. And we look at the daily time frame. We are coming into this this nice little support range. So I'm more interested in a 320 to 310 kind of consideration. I'll go ahead and add an alert here at around 320, just to kind of give us perspective on what's going on at that time. Because even though this is a support range, previous high potentially working as a new low, we're in a consistent landslide here. There's still a fair value gap below the price, and we haven't even tested our moving averages yet. So I feel like we're probably due to continue a bit lower before we see a recovery here, just because this coin is it's selling off a lot more than most other coins are. Okay, so SUI, I would consider waiting. If you're going to insist on taking a trade, make sure that you use low leverage, low position size, and recognize that there is a lot of open interest above the price, specifically at 380. I'm not proposing we see 380 anytime soon, but that's the next heavy area outside of 350. So 350 and 380 are those two areas of resistance, which are, I'll reflect that on our playout chart when I post a new updated one here shortly. By the way, those will be available for you by the time you watch this video. And it's all on my Twitter, Telegram, and Discord if you pick whatever platform works best. Discord is probably the most optimal for conversation and chatting. And then, of course, Telegram and Twitter are also very good about just kind of getting those live updates. Daily time frame for XRP. Let's look at that here in a minute. Jumping into the back end open interest data, we want to recognize that $2.93 to $3 is that massive area of resistance. We saw a bearish backtest at $3, and then the price pulled back after that. So it's one of those typical, support works as a resistance scenario. I'll show you on the charts what that means, but we're now at about 1.4 billion in liquidation short delta. More shorts being opened on this coin. So truth is, not really a great recommendation to consider a long. When we do take a look at liquidation here, we can see a lot of local liquidation just got fully destroyed. 280 is that lower range. So let's look here on the charts and see. We do have, once more, 280 is that local support, roughly. 278 for a fib level there, our 0.5 fib level. Once more, that fib level's on its own, by itself, not a guarantee. I would propose that I'm sure there's some LA wave theorists out there saying that that's going to work as a strong support, but we don't truly know that, right? It's all by itself. The key takeaway here is that range of 280 does have a decent amount of volume there based on just the price action hanging out there for a little while before it legged up again. But that doesn't mean it's going to hold. So I would not recommend just taking a long in this area just because, okay? Because when we take a look at the 4-hour time frame, we can see that we've got some nice resets here. Here is that bearish backtest of this support level. See, so we got our previous high, works as a new low, and the price comes down, it comes up and rejects. That's right where you want to consider shorting. So hindsight's 20/20, of course, but that $3 even short consideration would have been a great call. Of course, as per usual, had I been awake for it. All right, so those are kind of just how things are looking here. It's not a good market to consider just buying these dips. Obviously, it depends on if you're spot bag holder or leverage holder or leverage trader, right? Because if you're trading with leverage, it's a different story altogether. That's when you probably want to wait. But for right now, this 200-day SMA is just kind of hanging out at 286, just above the price action. I don't feel very confident in wanting to take along with this coin, honestly. So that's kind of where we're at there. Not the best thing, but it is what it is. I'm always going to shoot you straight and tell you how it is. And for right now, it doesn't feel like there's any good considerations for longs just yet. If you do insist on a long, very low leverage, low position size, and if you're going to add to your spot bag, consider setting limit orders down below at some of these levels here that I've identified in the videos, or that are available on our playout chart. They're once again on Twitter, Telegram, or Discord. Last but not least, be sure to check out BitUnix too, folks. They got an awesome deposit reward bonus going on right now, and this is a good feature for new traders too. So if you're using my link to register, you'll always be eligible for future competitions, and this is some good first trading rewards too. It's pretty easy money. So check it out when you get a chance. Link down below for that. That promo is running for the next couple months. All right, have yourself a good rest day. We'll see you the next one.